Our guest on Inside Jacksonville, a gentleman I've been waiting to meet after I was first tipped off on him, Hank Swindzinski.
That's correct.
Got it right. Okay. A professor who is and has been teaching, I don't know how many years out at UNF, the 1-minute guide to stock management. And you said you could talk about this for 5 or 6 hours. I could ask questions for 5 or 6 hours.
Wind me up. That's what my students tell me.
I do want to say real quickly that your next class at UNF is coming up. What is the date starts?
On 22 September. It's Thursday. It starts at 6 o'clock at night.
Okay, 6 in the evening.
6:30.
Okay, 6:30 is when the class runs. So if they want to sign up for after we talk for a few minutes here and get interested, which I think they will, they certainly can go to UNF.
Just go to the UNF website. It's www.learnjacksonville.com. And then look in there for the professor's 1-minute guide to stock management.
Okay, very good. And there's a book that you have here also, but that's part of the class. How did you, first of all, get involved in the stock market and then teaching the stock market?
Well, it's a funny thing. But I've been trading stocks for, over 50 years. I bought my first stock, Avco Lycoming, in 1964.
Okay.
And I was fascinated by it. I think I bought it by about $9 a share or whatever. And a few weeks later, it was trading at 14. And that absolutely hooked me. But at the time, I had to get in, back in 1964, there weren't any computers, there weren't things like that. There weren't any charts available. Actually, there were, but you had to buy them from the broker. And the same thing with commissions. Commissions were $126 to trade 100 shares of stock. But I started plotting these things, running out to the curb, getting my Washington Post and coming home and plotting a chart,
Right, because they do in the paper they did in those days, and they still do. They have the charts.
Back then they only gave you the price, and you had to plot the thing. But so I started doing that, and that when I saw the stock go from 9 to 15, I was absolutely hooked. And then later on. Even while I was in the Pentagon, I've been managing programs for the Navy for many, many years. I continued to develop my techniques, and I found that there's certain patterns and some very simple indicators that I use. And people would ask me, "Well, Hank, we know all about that you trade these stocks and things and whatever, but how do you do it?" So I started to teach the admirals and the captains and whatever that I was doing, what I was working with. And the next thing you know is developed it into a methodology. And then when I retired, I went to work as a consultant down in Pax River, Maryland. And I went back to my home. That's where I started out way back when in the early 60s in flight tests. But I started teaching then the lieutenants and the lieutenant commanders and whatever about the market. And then when I moved down here in 2004, I saw that again. We had just been through the market crash of 2001 and 2.
Right.
And I moved into Jack's Golf and Country Club where I currently live. And I started playing a lot of golf. And by 2007, 2008, I'm hearing a lot of guys saying, "Gee whiz, Hank, I lost a lot of money in markets."
Right. Well, the 7 and 8's when the next one happened. Yeah.
And so what happened was, and I got to tell you, I heard a lot of people lose a lot of money.
Oh, yeah.
So I'm sitting there on the sidelines, and my wife, Marcia, says to me, "Hey, you got to, why don't you do something about this? Why don't you try educating?" So I called up Dave Stieglitz, who was the club manager at the time, and I said, "Dave, I want to have a seminar for the members, okay?" And, this is kind of rather bold move because remember, I have there's no letters after my name. I'm not a broker. I'm not a financial advisor.
Right.
I don't sell anything. Nothing. Okay. So, but I just felt compelled to share my experience with some of those members. And I did. I stood before them. It was March the 11th of 2009. And I said, "Don't worry about a thing." I mean, these people were really dejected.
Yeah.
And I said, "Don't worry about anything." I said, "The market is going to go back up to past 10,000. It was trading at 6,500 or something right at the time.
I remember the time when it was a big deal and it went to 1,000.
Yeah,
That's how far back I go.
But anyhow, it was really, a bold move. But I explained it in terms that, I gave them my rationale. It wasn't just one of these things, well, I think. No, I laid out, a case. using my indicators as to why that's going to happen. Well, there was a lady that was in the class, that initial class there, and she called Valerie Murphy the next day at UNF.
Yeah, Valerie and I have corresponded.
Yeah, well,
so I got you.
Yeah, that's my boss.
Yeah.
She's fantastic.
Yeah.
But anyhow, so about a couple of weeks after that, we had an interview, and I think about a month later I was teaching a course. And now we've taught it to thousands of people.
Right, sure.
And over the last, I think it was teaching it now 9 years. So we've cranked through many, many, many people here, and not only in the Jacksonville area, but the word's gotten out.
Sure.
And now, because of a relationship that I had with AIQ Systems, who's the largest developer of trading systems in the world, things like that. Now, my comments go out to, people all over the place.
Wow. So is this a one semester a year, or is it 2 semesters, 3?
Yeah, we run the course. The course itself is consists of 6 hours, 6 contact hours. And we do them 2 hours a week for a period of 3 weeks.
And then, so how many times a year do those classes?
I run it generally about 3 or 4 times a year.
Okay. All right.
But I also do, some webinars and things like that. So.
All right. Now, so I've got all of those answers. I want to get into this before I ask you stock market questions.
Oh, boy.
Oh, boy. What this 1-minute guide to stock management, you have basically taken what drives everybody crazy, all these facts and figures and everything, you basically have narrowed it down to a 1-minute guide to stock management. Remembered one thing in reading some of your article: discipline was a big word. Big word. Yeah. Maybe your top word. Explain, again, without trying to give away all the free stuff to the class. Again, of course, that's 6 hours. We're talking 15, or maybe if we go 30 minutes maximum. Explain a little bit about this.
Well, before I start on that, my purpose in life right now as a retired guy, okay, is basically to educate. So I'm not embarrassed. I'm not trying to hold anything back. And if you ask me anything about some of the things that I teach, if I can help people, even during this interview, okay, with some of the things that we teach, I'm more than happy to share that.
Okay.
But the thing about the market that scares most people is the fact that it's one of these kinds of things that everybody thinks that you have to be a financial expert. Well, you have to have an MBA, or you have to have all kinds of training or whatever to do it. I reject that completely. Okay, we look at the crashes of 2001 and 2, and the crashes in 2008 and whatever, and we see all these so-called experts, these financial advisors and whatever. I mean, they all failed, okay? Most of them failed miserably. And like I said, we saw their 401ks go to 201ks and then 101ks. But all of this could have been avoided, okay, by simply following a couple of indicators that tell you, and these indicators are available for free on the internet, okay? So you don't have to go out and buy a $2,000 stock program, or subscribe to these crazy services and whatever that are advocating, do this or do that and whatever. Yeah. No, all you have to do is have a little bit of education, follow a couple of indicators, and the discipline to follow those. In my class, I say that discipline. You must have 2 things when you're involved in the market.
Sure.
The first one is knowledge, and then discipline to follow some of these indicators. But people think you need like about 98% knowledge. No, the truth of the matter is you need about 10 to 20% knowledge, and the rest of it is all discipline. Okay, understanding what is going to happen to a stock is not rocket science. Okay, it's just following a couple of few simple indicators. And these indicators that you learn on my in my class or in my book are basically they will keep you out. They will keep a senior out of another market crash. In other words, if you see something like this DMI that I teach turn negative, you basically need to be concerned. You ought to start picking up the phone and calling your financial advisor, if you use a financial advisor,
Right.
or your stockbroker, and starting to talk to them about, well, hey, wait a minute, why, what are you doing with my portfolio? Because we saw what happened in 2008
Sure.
or 7. The indicators went south a long time before the market did. This whole thing about, you never can time the market, or no, there is plenty of opportunity to get out. And, like, for example, right now, our indicators are starting to roll over. Okay, so anybody who's talking about the market, going to these, higher levels, wait a minute, you need to understand and ask yourself why. I mean, we're in a period of time right now where, everything is focused here on the Fed, but the Fed is hamstrung. Besides, it's a political Fed right now.
I was going to say there's a lot of controversy in relation to the Fed.
And we see last week on Friday, the growth numbers for the economy came out at 1.1%. And so, this is all happening at a time when our PE ratios are, at record levels. I mean, we haven't seen these the record PE ratio, price to earnings, is at 25%. 25 times earnings, and these are levels that we haven't seen since 2008, or before that, 2001. So, I mean, anybody
was that a good indicator or a bad indicator?
Well, I don't tend to use the
because you were talking indicators. I want to try and understand what indicators you look for.
All it's telling us is that the market is very richly priced at these levels.
Okay.
I mean, there's nothing cheap. And it scares the heck out of me because, we see so many seniors especially who are out there, they've been pounded by the Fed here with the low interest rates. Okay, so, right now there's not a lot of places where you can go to get yield. And our seniors need that for retirement.
Sure.
And what we're seeing now is they're throwing money at trying to get, dividend yields 3%, from some of their stocks. This is a very dangerous situation right now. It's
so when you talk discipline, what are you saying to these people? And I've been told I have very, very minor investments, not much out there, but savings, yes, but not, but what do you tell somebody if the stock or the values are going down, and you've seen this, and of course that's pretty much been the trend the last several months, frankly.
Yeah.
There's been some up, but they're mostly down. Do you tell them to stay the course, that it's going to be back up, or does it based on the stock that you're looking at? Or
yeah, not at all. Yeah, I mean, it goes back to conditions have changed. When I first started trading back in the early 60s,
I was going to ask you that next. So
you
good.
You had to pay $126 to buy a stock. $126 through a company like Merrill Lynch to sell the stock. So if you bought 100 shares, you were a buy and hold investor. Today's environment, I mean, you can use any of these E-Trade or Ameritrade type brokers and whatever, and you can get commissions as low as $6. Okay?
Yeah.
So when
is that per share or per trade?
Per trade. So
okay.
you can trade, thousands of shares for $5. In other words, in today's environment with these discount brokers, you can now. There's no point whatsoever in being in the markets when the the indicators start turning south. Simply, go and stay on the sidelines. I mean, why risk your money with when the indicators are negative? Just get out and don't worry about a thing.
Now, when you say get out, do you mean sell out?
Yeah.
Sell your stock?
Sure.
Sell it all?
Yeah.
And then, but there is.
Hey, there's nothing wrong with being
I
in
understand
cash.
that, but there is a tax on that.
Well, it depends on how long you've held your stock, okay, and whatever. So, I mean,
mine minimally has been in the neighborhood of 20 years.
Well, those are.
Of course, it's not big money either.
Yeah, those are situations that you need to discuss with financial advisor or tax advisor, okay? But I'm not going to talk about that aspect of the thing,
all right,
because I'm certainly not qualified as a tax consultant, okay? But when I see indicators that are negative, I mean, to give you an example, the Dow typically turns a positive or negative maybe about 5-6 times a year. Okay,
Yeah.
these indicators.
Okay.
So, for example, the last time it turned positive was back in June, and we've seen a rally here of over 1,000 Dow points. Before that, the indicators turned positive back in February 16th, and that was good for a rally of about 2,500, 2,600 Dow points. Okay, so, my approach is based on, in today's market, and this is no longer a buy and hold type of market. My approach is based on following some indicators, being in the market while the market is rising, and then going and getting out when the market is either falling or it's nervous or the indicators are mixed. But just follow the indicators and having disciplined approach to do that. And if you do that, you're going to avoid any kind of a problem situation. In other words, you'll be able to sleep at night, okay? Mm-hmm. Especially with our seniors who right now, the problem with our seniors is they're running out of time, okay? I mean, you could recover after 2001 and 2 because we had time. 2008, we had some time. But a lot of people right now are getting to, hey, they've been burned once and twice. They can't get burned again.
Well, and if they do get out, and let's say they have whatever, it doesn't matter, $100,000, $300,000, $500,000 after sales and after their tax, et cetera, where is the best place to put the money? I've heard of bonds, treasury certificates. One of the best places I found a long time ago, and I haven't had any kind of money to put in that since 20 years ago, are school bonds. These generally are tax-free. They were 20 years ago. Where's the best place to put the money?
Well, I'm not too crazy about bonds, and the reason is because of, bonds right now, the interest rates are so low, and if we start raising interest rates, people are going to get hammered on the price of the bonds. So. Right. Anytime, I mean, it's a different story if bonds were up at 10, 12% like they were, years ago. Hey, a decrease in bonds, it causes a decrease in yield causes the increase in bond prices. But we're not in that situation anymore, and people need to understand that. So,
this is not like it was 40 years ago.
No, it's not. It's not the same type of environment. Principally, one of the reasons for that is the demographics have changed. Okay, back in the 60s, when we came off the, we had the boomers that were there were, 79 million boomers that were produced after World War II. And these people, they came out of, they started to get jobs, raised families, and so we had 79 million people that were out buying things. Okay, the country was growing. We didn't have any competition from China, from India, from Japan like we have right now. And you could throw a dart at the dartboard, and everything was going to go up. Well, not now. I mean, we have tremendous competition. Things are being made and all over the world.
Right.
And so it's a completely different market. But the main thing is the boomers now, this tremendous force that we had, during the 70s and 80s to propel the market. Remember, the market was propelled mostly in the 1990s by the boomers. Now, all their kids had been basically educated. They bought all their houses, bought all their furniture. They had all this excess money, and they just dumped it into the stock market, which was the investment vehicle of choice. It caused the market to go up. Right now, we're in a situation where we're seeing 12 to 14 million, 14,000 seniors a day retiring. So these folks are now pulling money out of the stock market, okay?
Yeah.
And we no longer have the same forces, the same demographics that were prevalent. So this whole concept of buy and hold, is a very dangerous type of a thing.
One other thing I have to ask, and we obviously are going the full 29 minutes, that has always I was curious about. I see, for example, and I want it explained to me and everybody else out there, gas and oil. The oil prices per barrel are way down. The gas prices right now, most of it's around $2.15, $2.18, as opposed to when it was $3.50, $3.75. I would think because we have lower gas prices, there's more money to spend. The economy would react. The stock market will go up. But the fact seems to be consistently that when the prices go lower, there's more layoffs with the oil industry. They're not investing as much. Consequently, the stock goes down.
You're very correct on that.
And I don't understand. We have more money in the economy, but then, of course, they're not spending more for research. I mean,
yeah.
The profit margin seems to be like $10 billion every quarter. You know.
No, you're right, and it's an interesting question, but fundamentally, you know, what's happening right now is the lower fuel prices are impacting more people in terms of jobs, and you know, and people are losing jobs. I mean, we're seeing another housing recession taking place down in Houston. Same type of a thing going on in North Dakota. And oh, by the way, this has a trickle down effect in the economy because no one's buying plants and equipments and you know those kinds of things. And so yeah, the people are saving a little bit of money in gas prices, but they're worried about the economy, and as a result, they're not spending that money. We see consumer spending really dropping off here significantly.
So that more or less is the problem. In the Times Union from David McHugh out of Frankfurt, Germany, actually. He says record low interest rates were meant to be a temporary response to the global financial crisis. What do you take out of that?
Well, you know, we're getting a class here, folks. We're seeing lots of problems in Europe right now, especially with the European banks. You know, some of the banks in Italy right now are really they're really becoming very, very stressed. And it wouldn't surprise me if over the next couple of weeks that we start seeing, you know, some of these banks start, you know, talking about, you know, all these bad loans that they've got. I mean, the amount of bad loans that they have are really significant. They're of the 2007, 2008 type levels that led to the collapse of Lehman Brothers, and you know,
and so that does impact,
and that's going to
impact.
And what we're seeing too is, I mean, you know, several countries in Europe right now are at negative interest rates. For example, like Denmark and even in Switzerland, for example.
Well, and Brazil's not in the best situation right now.
Yeah, but negative interest rates. I mean, Americans are not paying attention to that, and this could actually roll over here into the United States. You know, last week they had a meeting on Friday. You know, of the Fed there in Jackson Hole, and one of the topics that they had was, in fact, you know, these interest rates. I mean, in Switzerland right now, you know, you basically have to pay the Swiss banks to hold your money for 30 years right now. Now, think about that. That's, you know, that's really
instead of the banks paying you,
yeah, you know. So, and we're seeing that all over Europe right now.
Yeah, I'm looking at this as central
Germany.
Banks in U.S., Europe, and Japan keeping their benchmark interest rates at zero or just barely above, which shows weak economic growth. Although Janet Yellen indicated that there might be a little bit of movement, and if the interest rates do go up, how does that affect the stock market?
Well, you know, Yellen is in an interesting situation here. She was appointed by Obama, and so
she's basically could be a lame duck,
right? So she's not going to rock the boats here. I think that you know, we're probably pointing towards an interest rate increase in December. The stock market is going to start recognizing that here pretty soon, okay? And they're not going to like that. But you know, that was interesting to see Yellen on Friday to basically tell everybody that, you know, oh, everything is good, the country's growing, and what, yeah. And then immediately after, 30 minutes after, her deputy came back and said, well, maybe not, okay? And oh, by the way, you know, the GDP numbers was revised downward from 1.2% down to 1.1%. So, you know, what Yellen is saying and what the economy is doing are two different things. And I think the Americans public or investing public are starting to understand that. I mean, they see when they go to buy the price of beef or the price of things and whatever, in the supermarkets and whatever, that we're having price inflation.
Oh boy, are we?
And
yeah,
so the government can talk to you all they want about how things are rosy, but it's not the best scenario.
Real quick, because we've only got about 4 minutes left. I in just reading some of this stuff here, the interesting question that was posed by somebody that put this article together. Most rewarding thing students experience that you've had with your teaching at UNF?
Oh God, I've had many. And as a matter of fact, that's the reason I continue to do this. People always ask me, say, "Well, Hank, why do you do this? Okay, and why do you share this information?" And I got to tell you, I love the markets, I love trading, but I love getting the emails that I get from all my students, over the years, that talk to me and tell me, Hank, thank goodness, that I attended your course. You've either saved me all this money, or you've made this much money for me, or whatever, and you've increased my knowledge, and I'm no longer afraid of the market. As a matter of fact, one of the interesting things is, when I retired in 2004 and came down here, I always intended to play golf, and that's why I moved into Jack's Golf. But
you have a friend that's out there.
Over the years, I've I don't play golf anymore and whatever. But I've had many people. See, when women retire here, okay, they have all these different networks and things where they go out to the lunch bunch with their girlfriends and whatever. Guys, they sit there, and after they don't play golf and they retire, they wonder, what the hell am I going to do anymore? Okay? Well, a lot of them have come to my classes, and this has opened up a whole new life for them. Okay, I get feedback from these guys that say, Hank, after taking your class, I can't wait to get up in the morning. Okay, I can't wake up in the morning, I turn on the thing, I look at my charts, I look at what's going on in Europe, I check out the DAX and whatever, I sit there, I'm energized, I can't wait to trade. And
so they're back and forth and buying and selling.
Those are the kinds of things that I get, the experiences and the pleasure I get. But and occasionally I get a really nice letter. I've received several over time from especially women where their husband died. Okay.
Yeah. And
the guy was in charge of the finances.
Right.
And now they're left, and I had one lady that her husband passed away, had a $750,000 portfolio. The financial advisor took it down to about $200,000. And she took my class and has become involved in the stock market. Got all that money back, and but I get letters like that all the time.
If anybody wants to learn about the class, sign up if possible. The next one you said is coming up on the 22nd. 22nd. Where do they go to? What website?
Again, www.learnjacksonville.com. And just look in there for the courses. It's called The Professor's 1-Minute Guide to Stock Management. The cost is $149. It's not one of these $2,000 courses. You don't need any kind of special software.
Well, and as you said, you're not a broker. You're not out making commissions and money and all this. You're a teacher, a little bit there, and UNF gets a good part of the money because it's classes there. And 3 2-hour classes, right?
3 2-hour classes, total of 6 hours. I usually run maybe about 5-10 minutes more. And, I give them updates on the markets.
Of course, you're so hard to talk to. You're so hard to pull out because I never could get anything out of you. We went through 30 minutes like lickety-split. This has been fascinating, and I actually got to ask 2 or 3 questions I've been wanting to ask for a long time. And, I asked the financial guy that actually was my parents' financial guy, which is why I had that money there, which is not a lot. But this has been fascinating. So thanks to the people out in UNF and the young lady that put me on to you. So
Valerie Murphy. Thanks so much, Valerie.
Yeah.
And her support team.
All right. Thanks, Hank.
Bye-bye.